In this video, guys, we're going to talk about a simple day trading strategy for beginners. For you to be profitable in day trading, you need to understand some factors that control the market. Like, for instance, you need to trade when the momentum is high, and also you need to understand the price action. So for us to trade profitably, at least making 20 pips per day consistently, we need to understand the power of wave analysis. Now, the concept of momentum and the concept of price action and head and shoulder pattern and liquidity, all this can be summarized in wave analysis, because the wave analysis is derived from the summation of all market participants. Okay, so the psychology of all the market participants is seen to be interpreted in wave, and this wave creates pattern. For instance, you have every market start from and makes an impulse and corrects himself, makes another impulse and corrects himself and moves high, and these are measured in time, okay, against price, which P is price. So your job as a trader is to understand what happens here and what happens here, irrespective of the time frame or the instrument you are trading. So you'll be able to catch this impulsive move that makes you the big money in the market. So for us to trade profitably on a daily basis, we need to answer the question: what patterns do we look out for in our trade? So the first pattern we need to look out for in your day trading is a regular flat. So a regular flat is whereby you have an impulse and we have a correction, three-wave correction, and after which, once this is confirmed, we start moving up for the next impulse. So your first job is to identify this first impulse, and once it's complete, you look for this impulse correction, impulse corrective nature, then afterwards you look for this. Then your second job is to identify an impulse, and the second pattern you'll be looking out for is a pattern called expanding flat. Okay, so after which the market continues. So this is your job, to look for this pattern and to look for this pattern. Okay, and the third one we are looking for is an impulse, a correction, and to look for this pattern. So this is a running flat, this is an expanding flat, and this is a regular flat. Okay, so you can take a picture of it, you can save it and start seeing how you're able to identify it in the market. You see, the beauty part about this is that once you begin to identify this pattern, you will keep seeing it everywhere, irrespective of the time frame you are trading. So for us to make 20 pip in every market, you go down to any time frame you want, identify your first impulse, look for this correction, and then trade the next impulse. Identify your first impulse, look for this correction, trade the next impulse. Identify your first impulse, identify this correction, and take the next impulse. Now let me take you to some of the trade we've taken using this concept and see how easy it is to be profitable in any market. So currently now we can see an impulse here. We've seen a correction in a three-wave move, so we can see that this might be a regular flat. So, and we're expecting this market to drop. Now remember, our target here is just 20 pips, okay? Because we are in a lower time frame, and you know that there are a lot of noises in the lower time frame, so we won't want to hold the trade up for a long time. Okay, so if that's the case, then you are permitted to put in your sell position here. You put in your sell and drop it here. Okay, so if you play out this to see what happened, this is just 20 pip we're expecting on the market. We're just expecting 20 pip. Okay, you can see the TP is hit, so we are done for this trade. Now you can fast track and see what is the next place, what will be the next trade. Okay, so now we have seen the second impulse. The second impulse have just taken place. So after an impulse, we wait for the confirmation. So we've seen an impulse. So let's see if we can see. We are seeing an expanding flat, an impulse, a correction, and impulse. Okay, if you should expand this, you see it clearly. Okay, so this is an expanding flat, but for us to be on the safe side, because this expanding flat is not that clear, so we'll be engaging in this market, but once the market clears this resistance, okay, so that will give us a confirmation, because the reason is that we also have a regular flat, and in all we have seen an expanding flat. So we'll be engaging in this market once it clears here, because that will be an indication the market will keep pushing high. Okay, good. So at this time, let's put in a buy. I put it in a buy here, and put your stop loss here, and we're just expecting to bang in on just 20 pip. Okay, so and that 20 pip should be, this is above 20 pip, 20 pip should be this point. the TP is hit. So the trade is profitable. Okay, so you keep expecting to see if you have another pattern you recognize. So you play it and see what happens. Okay, so at this point in time, what do we see here? We've seen a regular flat again. So this is an impulse. So we have impulse, correction, impulse. So this is a regular flat. Okay, so a confirmation of a regular flat is the market will keep pushing high. So here, what do we do? For you to be sure, you need to put in your entry at this point and expect the market, once it clears it, you're going to take a buy once the market clears this resistance here, and you put your stop here. And remember, we are only expecting 20 pip. We are not triggered. The market has triggered us. The TP is hit. So you can see a 3 profitable trade. This is just the way we are taking it. We look for an impulse, we wait for a correction, we look for an impulse. Let's see if we can take one more. We just keep playing it and see what happens. The bears might be taking over because the structure is broken. Okay, so the structure is broken because we've seen an impulse here, and we've seen an impulse, we've seen a correction, and now it comes down to break here. So what do we do now? We'll be waiting to see what happens, because that might be a beginning of self-setup. So let's go down to 5 minutes, because once the market starts doing what we don't understand in a particular time frame, you can go to the lower time frame to see what actually is happening. So if you go down to 5 minutes here, what do we see? So in the 5 minutes here, we can see a clear analysis of what's going on. This is an impulse down. Okay, we have this impulse up, and market didn't break it, so it's just in between. So here now we can see a crest structure. This might be an impulse, a correction, an impulse. As I told you, this is a running flat. Okay, so what that tells us that at the break of this, there will be a strong reason for the market to start coming down. Right, so that is what we'll be expecting, and you can see. Let's see. Once this low is cleared, we'll be putting the sell downwards. So we are putting a sell here. And we'll be expecting 20 pip or more, because here now we're expecting at least the market to break to this point. So, all right, so we are in the trade. All right, so let's see how it goes. It's reversing. Oh, look at what happened. The TP is hit, and this might be the TP is already hit, man, guys. You see what happened here? You don't need to panic when you're in trade, but you see what happened? You're already closed. Okay, so that tells you the power of understanding market structure, right? So we are back to 15 minutes here. So let's see if we can take one more. Ooh, it's still going down. So here, okay, so also there is a regular flat here, but it's small. We have seen a regular flat. Okay, so it might not be taking that, but let's just illustrate that we have a regular flat here. So what you expect, at least you'll be expecting the market to drop one more before start going up again. So even though it's too small, but we've seen that. Let's see what happens afterwards. You can see exactly it plays out, even though we did not take the trade, just because we're able to identify this concept. Okay. So now we've seen another impulse. Okay, and this impulse now we'll be expecting the market to give us a 3-wave move. Depends on how it forms, for the market to push high. For any impulse, there will be a corresponding impulse. Okay, so now at least we are seeing a structure that we recognize, and that structure is simple: an impulse, and this is all correction, Okay, so it's either this breaks this low or it stops here to reverse. But at least we are seeing a structure we recognize, and to confirm it, we are looking for a reversal candle. So once there's a reversal candle in terms of bullish and start breaking that one, we'll be taking the buy. Boom. So this is a reversal candle. Okay, so once this starts reversing, then we'll be taking a buy. So what we need to do here is to put a buy at this point. Okay, so I will put a stop loss here, and you're expecting just 20 pip here, even though this is 30 pip, but you're expecting at least for it to break this high at least. So there we go, we are in already. The TP is smashed. All right guys, so this is where we're drawing the curtain for today. Kindly contact us if you want to learn these concepts, how to trade effectively, profitably, at least making 20 pip per day consistently, right? So we are here to help you, and you can contact us using the details below this video. And don't forget to subscribe and like this video. Thank you for your time.